Hi, this is Kumar and in this video we're going to be covering moving averages. As you know, moving averages are used to smooth out short-term fluctuations and they can show us longer-term trends and cycles. You don't need to calculate anything, it's done automatically through your charting software, and it just simply is the average price of whatever period you select. So as you've already read, there's the simple moving average and the exponential moving average. We are going to be using the exponential moving average because it holds more weight to the recent prices relative to the older prices, and therefore it reduces lag, and that's really what we want. And we're going to be concentrating on the 10, 20, 50 and 200 exponential moving average. So what I'm going to do now is I'm going to show you how to apply it to the chart, and we're going to just have a look at how it helps us indicate trend and how we can use it to indicate whether we are trading with the trend or not. Okay, so I'm going to show you now how to add the moving averages to the chart. We are on the hourly time frame looking at euro against US dollar. And I just wanted to point out that when you add the moving averages, as you change the time frame of the chart, the moving averages will automatically change. So you don't have to keep altering the moving averages. Okay, so to add on the moving averages, what we need to do is I'm going to just lower the chart so you can see the buttons here. So as you can see, we have all these buttons here, and we also have all the time frames here. As you can see, we are on the hourly time frame there. So what we have to do here to add a moving average is we click on this indicators button and we click on moving average, and all we simply do is we select which moving averages we want to see. So the first one we will start with is 10. So the period is 10. We leave the shift as 0. We want to do exponential, not simple. We apply it to the close, and the 10 period moving average we will have in blue, as they are in all of the charts in the Trade to Success University course. And so then we just click OK, and there you have it. That is the 10 period moving average, exponential moving average. And then we just do the exact same thing again. Click on indicators, click on moving average, and we select the next period. So we want the 10, we want the 20. Leave everything the same as all we need to do is just change the color. Change it to green. Click OK. That's the 20 EMA. Then we do the same thing again. Click on indicators, click on moving average. Select the next period, which is 50. Change the color to orange. And that is the 50 period moving average. And now the last period moving average, click on indicators, click on moving average, is 200. So the 200 period we normally have as red. Click OK. And there you have it. That's how simple it is. If you make any sort of mistake, simply right click, go to indicator list, and you will have this window appear. You just simply have to click on whichever moving average you want to either delete or edit. So let's say we select this moving average here and we click on edit. It is a 10 period moving average, and if you want to edit anything, just change whatever you need to change and click on OK. In this case we didn't edit anything because everything was done correctly. We just click on close, and that's how simple it is to apply the moving average. Now if I change the time frame, so if I go to the, let's say, the daily time frame, you can see that the moving averages are still on the chart and they automatically change according to the time frame you have selected. Again, you don't need to worry about exactly what the moving averages are and how they're worked out. The charting software does everything for you. All you need to do is know how to use them. So as a rule of thumb, we only want to go long, meaning we only want to buy, when the price is above the 200 MA. So as you can see, the 200 MA is the red line. So price is above the 200 MA. And when price is also above the 50 MA, which is the orange line. Preferably we want both MAs pointing up, so we want both MA lines to be trending up, which they are. And we also want the 50 EMA, the orange line, to be above the 200 EMA, the red line. In this case it is, and as you can see, when the 50 period exponential moving average is above the 200 period exponential moving average, it means that price is actually trending up. That's why we want to make sure that is in place, so we know that the trend is up and that we only want to buy it. Because as you can see, buying along this chart will put you in profit because the price is trending up. We only want to go long here. So as you can see, putting on the moving averages allows you to confirm that the trend is going in a particular direction. From now on in this course, whenever we are displaying a chart or talking about a chart, we are always going to display the exponential moving averages. So if I talk about the 200 period moving average or the 50 period moving average or any moving average for that matter, I will always be referring to the exponential moving average. Now let's look at the rules when we want to go short. So here we're looking at the US dollar against Canadian dollar on the hourly time frame. What I'm going to do is I'm going to just shift the chart up so we can look more at the chart. We don't need to see the buttons anymore. So as a rule of thumb, we generally only want to go short when price is below the 200 EMA. So price is below the red line. Price is below the 50 EMA, the orange line. Price being below the orange line. And preferably all EMAs pointing down. So as you can see, the EMAs are all downtrending. The averages are downtrending and the price is downtrending. We also want the 50 EMA to be below the 200 EMA. So as you can see, before the 50 EMA was above the 200 EMA, we're a little wary here. We don't really want to be taking shorts. But then when it crosses down below the red line, the 200 EMA, that is when we want to start looking at taking potential shorts. And as you can see, price is already downtrending by then. And especially in this area afterwards, when the 50 EMA crosses below the 200 EMA, we can see that price is trending down. If we took any shorts in these areas, we would be in profit as price is falling. We say as a rule of thumb because there will be some times when you will be going against the trend, but generally we will be sticking to these rules. Don't worry, whenever we're going to be trading against the trend, I am going to explain to you why and how we do that, but generally we want to be trading with the trend. So let's look through another example. Let me go to, let's say, the Australian dollar against the US dollar. This again is the hourly time frame. So as you can see here, we've got price above the red line, which is the 200 EMA, price above the 50 EMA. The 50 EMA is also above the 200 EMA. So we can be taking longs here. And as you can see, price is rising. So the EMAs give you a good indication of rising prices. Now, of course, we get a lot more advanced than this. This is obviously just the foundation. What I'm trying to show you here is we want to be looking at the moving averages just to give us an indication of what the bigger picture is doing in terms of the trend. It's one of the factors that we use when we're going to be looking for particular trading opportunities. So here we've got the Australian dollar against the US dollar on the 5-minute time frame. So here we see that the 50 EMA is crossing over the 200 EMA at this point right here. And once that happens, we can see that price is starting to trend down. We have price itself below the red 200 EMA. Price is below the 50 EMA as well. So we can start taking possible shorts here. And as you can see, the EMA start indicating that it's time to start taking shorts and price falls. And just keeps on falling. So the moving averages are great for giving us a general view of where price is according to its averages. And this allows us to see more clearly what overall trend we are in on the chart. Let me give you an example. Here we can see that price is trending up. But when we add the EMAs, we see that this starting area here is actually still in the downtrending phase, because price is still below the 200 EMA, the red line. Now the EMAs are all changing direction, but it's not until this area right here where the EMAs start to cross over the big 200 red EMA that we can actually start seeing a trend change occurring. So So moving averages are a great tool to have on the chart, and from here on we will always be putting on the moving averages on any charts we look at. Let's move on to the next trading component, which is support and resistance. This is Kumar for Trade to Success University. Click over to the next page and I'll see you in the next video.